Hello, hello, hello. How's everyone doing today? My apologies for being late on the scheduled time. I had some technical difficulties on the computer here, but we are ready to rumble. So in this video, we're going to be talking about the Barclays meeting that they had. And there's another meeting that we need to go ahead and acknowledge as well, but we're going to go ahead and focus on Barclays because it's definitely outside of Clover's. This is essentially another analyst firm, an investment company that's very well respected. That's essentially getting to know Clover Health, which is extremely good. It gives Clover exposure that they did not have. So we're going to go in and pretty much talk about it. If you can hear me, please go ahead and comment down below. That would be really very helpful. I'm going to go ahead and put our headphones on here so we can listen to the live stream, to the cast together. I want to also make sure that we are just put these here. Brazil, good morning, good morning, good morning. Perfect, perfect. You guys all can hear me from Brazil, okay? Good, how you doing, man? Much love, much love. Good morning, everyone. Good morning. Good morning. I'm very proud of the community that we're building. I'm very proud of all the information that we're learning together. This is a tremendous opportunity to sit down and learn. Hey, happy St. Patrick's Day. I love it. I love it. Good. For people that are not in the United States, some parts of Europe celebrates, but it's a Irish holiday where if you do not wear green, we pinch you. And if you don't own Clover Health, we will pinch you. I love you too. Love you too. Much love, much love. So if you don't have Clover, you're about to get pinched, right? Sound like the Italian mafia. You're about to get pinched, right? All right. So after the conclusion of this live, not the conclusion of the Barclays event, the healthcare conference, we're going to go in and we're going to be doing kind of a quick wipe down on Clover Health, looking at the technical analysis, just trying to see where Clover is at right now. We understand that Clover is up right now based off of the Fed's movement. For people that are just tuning in, I posted a video yesterday regarding the federal chairman, Jerome Powell, regarding their interest rate hike and what we're supposed to expect for the future. So definitely watch that, but we'll add that sprinkle it on here as well because it is so important. If someone can help me, please post this on StockTwits. That'd be very helpful so we can engage the community from multiple platforms. StockTwits is a very nice platform. I just don't use it a lot. I should probably get into it, but yeah, please post this if you can so other people can understand more about Clover Health in a very unbiased platform. All right, so we're going to go ahead and share the screen here, but we're going to do it for audio. There we go. There we go. Okay. And then I'm going to put this at 1.5 times the speed. If it is fast, let me know to slow it down. You guys have control over this whole live stream. You guys are in control. So let me know. I'm going to go ahead and mute myself.
The healthcare services analyst here at Barclays. Next company up is Clover Health. With us from the company, we have Vivek Garipelli he's a CEO. And I guess it's going to be a fireside chat, right? I'm going to turn it to you for any remarks. We're just going to dive right in on the questions. Okay. All right. That makes it easy then. Okay, great. All right. So, I think just kicking things off, I think at a high level, I think investors understand that you're focused on the Medicare Advantage market. You have some payer and provider assets. Maybe it wouldn't hurt just to give a quick overview of what makes the company a little bit different from.
I think this is a little too fast, so I'm going to go ahead and slow it down.
some of the other offerings that are out there when people think about the Medicare Advantage marketplace, and we'll kind of let things kind of morph from there.
Absolutely. Thanks for having me here, Steve. So I think at our crux, our value proposition is really deploying what we call Clover Assistant to clinicians. So our thesis is really how do we help clinicians make great decisions at scale, and that's underpinned by ensuring consumers have that paired with a really wide network. So when we go back to kind of the original founding of Clover, we've always started off with an open primary care network, so where consumers can go in or out of network at the same zero cost sharing. So what that's allowed us to do is pair a really attractive plan design, which has driven a lot of our growth. At the same time, it's given us now well over 1,000 physicians in the MA side where we've been able to deploy Clover Assistant to as their covered lives.
So you guys saying too fast? So I went ahead and fixed it. It is currently at 1.5 the speed. I mean, I can make it at 0.5, but I think that's a little slow. But let's hear it.
Have grown, and when we think about,
yeah, that's a little too slow. So we're gonna go ahead and just put the normal speed at 1. You guys can slow it down on your YouTube.
The differences is we've really underpinned Clover Assistant on a few first principles approaches on how we think about software. So one, we intentionally built Clover Assistant physically outside of the EHR platform. That allowed us to own and control our feature iteration rate, not be subject to legacy EHR systems, not have to integrate with software that physicians already don't like. Two, we created a very clean payment model. So when clinicians are on Clover Assistant, we pull them off of claims and pay them a flat fixed payment tied to using Clover Assistant. So there's no way for clinicians to kind of game it one way or the other. And the decision-making is really pure because payment isn't really tied to the decisions themselves, but really just clinicians using the software. And then now, many years later, with the software deployed, we're able to complete back-end integrations with a lot of the EHR systems, but really on our terms in a way that makes sense from a scale perspective and technology perspective.
Okay, great. Yeah, maybe just sticking with just talking about the Medicare Advantage marketplace a little bit. Obviously, there's been a decent amount of churn in this last AEP. You guys still had some pretty good growth numbers. So it didn't seem to really impact you guys. Maybe just talk a bit more about kind of the internal versus external distribution capabilities from the company perspective, and how you see yourselves, how that might change over time, I guess.
Yeah. So it was definitely interesting to see some of the growth challenges some of the plans had. We think this is more, what I would call a lagging indicator of what's been happening in the marketplace for the last many years. So when we think about consumers, traditionally they've had the choice of either a narrow network HMO plan, restricted primary care choice, or an open access network but higher cost and less supplemental benefits. Even despite that, though, the PPO side of MA plans has grown kind of high single digits, in some markets low double digits. When you look at the last 5 years, the HMO side has been low single digits when you look at the last 5 years. And this is just kind of nationwide data, and you can look at it market by market. And the way HMO plans have kind of made up for it is investing a lot of dollars in marketing dollars with FMOs.
Just a quick pause here, just to go over what's happening, just to answer a few questions here. Yes, this is the CEO, Vivek, and which is good. We can hear more from him, right? And I haven't listened to this, so I'm listening to it with you guys live here. And I believe hopefully Andrew comes on. But yeah, I really do like Andrew's passion. He's the president. He's very passionate. I just really enjoy hearing him. He's just very... It's hard to explain, but he's just a very good communicator. I'm not saying that Vivek is not. It's just I just love the way Andrew Toy presents really well. So, in regards to just for people that don't understand the differences between HMO, PPO. So the way Medicaid works, or Medicare, depending on whether you're older than 65 years of age, is that, if I were to ask you right now, which insurance plan do you want? Do you want insurance plan A, where basically you're restricted to, let's say, these sets of physicians that you have to see? Or insurance plan B, where you can see any physician you want? Obviously, B is better, right? Because as Americans, intrinsic to our belief system, we believe in freedom. We believe in wanting to choose whoever and whomever we want. So with Clover, they're actually doing that. It's called PPO, right? It's actually a really, if you were to grade it, it's like a Lamborghini style healthcare, right? It's like very high premium type of healthcare, but it's geared at people that have been historically marginalized, which is amazing. Obviously, people are going to choose that. This is the viable plan, and we already know from, again, I'm a medical student. We already know from data from the AAMC, patients want to see doctors that share the same cultural and ethnic experience as them. In fact, there are better health outcomes because of that. So this directly ties into Clover's mission, which is to do the best they can. And they're walking the talk. Let's go back.
HMO side has been low single digits when you look at the last 5 years. And this is just kind of nationwide data, and you can look at it market by market. And the way HMO plans have kind of made up for it is investing a lot of dollars in marketing dollars with FMOs, a lot of marketing dollars with e-broker channels, and that's been able to kind of make up for some of that growth drop. But I think now that's kind of coming to roost a bit. And I think what we're really seeing is just consumers want choice and low cost, which is something we made, has been a core part of our thesis for the last 7-8 years. So when we think about independent channels or external channels, the churn is just a lot higher on the e-broker channels, mainly because there's not that relationship that's built in. And so that retention is a lot harder. So we have not invested a lot on those e-channels. So a majority of our enrollment is true independent agents with FMOs. We don't give them marketing payments. So this is just where agents are just helping consumers make the best decision for them.
Okay. Do you have any color on how much of your membership gains come from just new first-time eligible seniors versus maybe getting people to switch from other plans over to Clover?
Yeah. So if we look at the last many years, it's a bit over half of our growth has been MA market share take. So switching from an incumbent plan, MA plan to Clover, and then under 50%, but I think in the 40s has been from fee-for-service or an agent, with the majority being from fee-for-service.
Okay.
Of that 40+%.
Got it. Okay. All right. Just taking a step back for a moment, I think investors are certainly intrigued by what we'll call some of the next generation managed care companies, or I guess you can categorize or describe yourselves a bunch of different ways around that. But one of the challenges though is to get to a point where the book is mature enough that you're operating on a consistent level of profitability. Yep. So maybe you can just spend a couple of minutes, really two interrelated questions, I guess. First, just visibility on operating expenses and how much that may continue to increase or maybe decelerate as far as the growth of that as you think about the investment spend.
This is an extremely important question. Like, you need to listen to this. What he's asking pretty much is when you're going to decrease your operational expenses. This is an indirect way of basically hinting at profitability. Essentially, when is Clover Health going to be profitable? When are they going to become free cash flow positive? When are they going to have a net income that's positive? That's important, because once that happens, guys, the sky's the limit. The sky's the limit for the stock.
but also just provide some color on what the bridge may look like to get to profitability over the next couple of years.
Yeah. So I think just on the OpEx side, this year is a pretty big deceleration in OpEx growth relative to Q4 run rate last year. I think we'll see that trend going into next year as well. There's also a lot of investments we're making that we think are going to really extract the synergies that we have across our MA side and our ACO Reach side, which is now 2/3 of our revenue projection for this year. And then from a gross margin standpoint on MA, and we've given guidance in the 90s for this year. So we expect to see a stepwise improvement this year versus last year. And then I think next year we have another improvement coming versus this year as we think about increased Clover Assistant coverage. Now that we're able to be back in the field, our home-based programs are now able to be.
That's extremely important, guys. This is extremely, extremely important. What he basically stated is that there's going to be a de-acceleration in terms of the operational expenses, which means that the Clover Health is slowly going to decrease their cash burn, which is something that I was worried about, right? Another thing is that they're making other investments to help bolster up their growth, and AKA their revenue. And that third point he mentioned was that they are going to leverage their Clover Assistant. Who knows? They might be able to license it, right? This is a very critical thing to look at, because this is not just an insurance program, it's also a technological AI software program that they're able to basically lend out to other maybe hospitals, agencies, countries, right? They also have a headquarters in China. All right.
Be back in the field this year, and then layering on care coordination around more curated specialist networks, which is something we haven't done in prior years as well. So we kind of pair all that together. We think we're on kind of another improvement next year versus this year, as we expect for this year versus last year. And then kind of on what kind of swings us to profitability or not will depend on where we land on gross margin next year on ACO Reach as well.
Okay. Can you remind us again, when you focus on profitability, whether it's at the EBITDA line or even cash flow, how you're looking at that from either some expenses that might be included or excluded as far as stock, comp, et cetera?
Yeah.
Does that sort of change the view when you turn profitable under different definitions, I guess, of how people look at it?
So I think this year, I mean, what we'll be reporting is just kind of GAAP MCR on MA, GAAP gross margin on ACO Reach, and then just OpEx this year. Just
by the way, the ACO, think of it as a new version that CMS. It is the new version of what CMS published as another version of direct contracting, and it specifically is geared to help people that are historically marginalized, people that in terms of to be able to increase health equity within the healthcare system, which is exactly what Clover Health is doing. And he said the growth, essentially profitability, depends on the growth of the ACO. Now, I honestly think that profitability is going to come in 2024, like true profitability. But there's other levels of profitability in terms of the GAAP and non-GAAP measurements, which are different accounting principles that people can use. We're going to talk about at the end regarding CFO and how that's going to help them. But I just wanted to give some clarifications.
Excluding like true non-cash expenses that are with consolidated subsidiaries where we're not funding those. Next year is when we'll probably get a little bit more granular on the OpEx side, really trying to delineate for investors as to what's truly non-cash and what's cash, what's truly non-recurring and recurring, mainly with the goal of folks to get a better understanding of what our go-forward OpEx structure is and how to think about some of the investments we're making. But practically speaking, long term, it's just to be reporting kind of GAAP margins and let folks kind of make their adjustments as they want to make them.
Okay. All right, great. Maybe just shifting gears here a little bit and thinking about the star ratings. which obviously is, critical within Medicare Advantage, one, from a marketing standpoint, but two, from a potential incremental revenue standpoint as well. So, but basically, as far as where you guys are sitting on that spectrum right now, I think you're, trying to get to a 4-star rating, across the organization. Maybe just talk about some of the steps you're taking to try to reach, that milestone and what the timeline looks like. And then I may have a follow-up on star ratings after that as well.
Yeah. So our goal for this year's measurement year is 4 stars. That would flow through in payment year 2025. The real investment around that is increased coverage of Clover system. That would flow through in payment year 2025.
2025. You see that right there, that last comment? 2025. That 4-star rating is that essentially the fruits from that labor is going to be flowing into 2025. Our price targets for Clover Health, which essentially you can find here on our private Discord channel, along with other private other stocks that we've analyzed. Let me go ahead and here in our price targets here. Down here. As you can see, these price targets are for 2024 to 2025. Oh, you can't see them. Give me a moment here. As you can see here, the price targets, and this is more of an integrated live session with Barclays, so we're going to be tying stuff in, which is the benefit of listening it with us instead of having just listening it by yourself, or just kind of give some commentary here and answer some questions. So as you can see here, 2025 is when the fruits of the labor is going to happen for Clover Health, and our price targets within our private Discord channel is geared from 2024 to 2025, and the price target's going to be $48. That's what we believe what Clover Health is, and that's actually undervaluing it. We believe that it could hover any. We already know that direct contracting is going to remain, so we're looking at $60 to $131. But again, I'm a bit more conservative. $48 would be sufficient. Okay, so that I just wanted to just kind of drop that there. Okay, so let me go ahead and add the screen back on.
The real investment around that is increased coverage of Clover Assistant and incremental new features rolling into Clover Assistant will have an impact for this year. I think the other tailwind that probably doesn't impact this year, but could impact next year's stars, definitely 2024, are some of the changes in the rate notice. So there's a proposal in the rate notice for a health equity index that'd be a measure added to the star rating. There was another proposal around med adherence to make adjustments based upon area deprivation index, which is tied to census data. And there was a third component, not necessarily tied to stars, but tied to risk adjustment in the rate notice, where there was a proposal around an inflator that would go on to risk adjustment for.
Again, I'm so sorry for pausing the video and just analyzing this, but that's what you guys need to do. So he's talking about the deprivation index. Essentially what that measures is it looks at the socioeconomic status, the social stratifications of class, race, and gender, and isolates that. In layman's terms, basically what that basically means, too much words basically, is that it's looking at how sadly, how poor the population is. And Clover Health essentially focuses on the people that have been left out by the healthcare system, which is why, as someone who's going to be a future physician, which is why I'm a huge supporter of this company, not only by the revenue growth, but also by the hearts that they have leading into helping the people that need the help the most. So that is incredible. And if you recall, and the reason why I paused this video right now, or this audio clip, is to inform you that in November, there is a health equity paper that they publish. In fact, I'm writing a white paper in collaboration as from my medical side with Clover. It is important, though, that you analyze that before CMS actually shifted into gearing more in the health equity index, Clover Health was already doing that. Clover Health wrote a freaking white paper and designed it and integrated with their business. Ladies and gentlemen, CMS is going to be using Clover Health as the guidelines and as the star within its pillar for other insurance companies to follow. Let me just put that there. Okay.
For membership in a higher area deprivation index area and a deduct to make it budget neutral. Hasn't really been discussed, any of those three, because it was buried in 548 pages or something. But we were very excited to see those proposals. Now, those will definitely have a negative impact on the incumbent operating margins, but I think the whole point of that is to drive behavior change on how plans operate to make sure they're much more inclusive on their membership mix. So for us, it's a big tailwind.
Okay. Okay. So tying some of that together then, as we think about some of the investments you may have to make or not make to get from 3.5 stars to 4 stars, is there a lot of incremental expenditure required to achieve that? It's kind of tying everything together you just mentioned, or when does the leverage really start to kick in around that?
Yeah, I think for us, it's really features within Clover Assistant and then increased coverage of Clover Assistant. So not any material amount that we would view on the SG&A line. When we think about what we're trying to build is really trying to build scalability with the platform versus, I would say more traditional approaches where you really are throwing a lot of kind of bodies or vendors at a problem per se.
Okay. Okay. And then you touched on this a little bit at the beginning, but I think it's worth maybe diving into a little bit more. As we think about Medicare Advantage, I mean, there are some differences in the margin profile on more of an HMO book versus PPO. Maybe you can talk about some of the things. You touched on this a little bit, but just what you're doing really to drive success in the PPO margins and how that separates where other companies have kind of struggled with that a little bit to get more of an open network approach, maybe more volatility in medical costs potentially.
Yeah, so I think if you think about all the MA margin on large incumbents or a lot of MA organizations, they're all on the HMO side. The PPO side really is a construct for them to get them into the plan and then move them into the HMO side. And there is no actual clinical model with those PPO plans. It's all embedded in kind of a narrow network on the HMO side. And that's really where we view Clover Assistant as that great equalizer where it can be deployed to any primary care physician as long as they're a willing user of it, and really be able to democratize decision-making, really improve that consistency of decision-making, irrespective of kind of the primary care network design. And that's really that powerful unlock that has allowed us to drive margin enhancement when we look at lives that are with a doctor not on Clover Assistant versus lives that are with a doctor on Clover Assistant. We've shared that.
So I just wanted to interject something from my own experience. As someone who's going through medical school, my first 2 years of medical school, in fact, my first year, we had these clinical groupings where they teach us evidence-based medicine, where we're in essentially sets of groups of 10 to 12 people, less than that, with a physician, in which they give us a vignette in where we would have to isolate and diagnose and treat this hypothetical patient that is actually from a real patient, right? What we have to do, though, is the way we did it is we have to go in and use UpToDate, which is a clinical platform that uses evidence-based medicine essentially to gear it down, which means that the healthcare you get down in Arizona should be the same clinically inside of through the scientific method all the way up into the healthcare in New York, or let's say the healthcare in China, evidence-based. Because back in the day, there was a lot of, from my understanding, I asked, why were we doing this? I'm always, want to learn. They said, well, because, sometimes doctors are like, well, I've been doing this for about 30 years and it's been working out really well. When in reality, sometimes, yeah, it may work, but we don't know why it worked. So maybe the evidence says, and obviously there's different levels of analysis. There's meta-analysis, right? There's different levels of analyses, and the meta-analysis is the best, which suggests that maybe the way you're doing it is not the best. So the way we're training physicians now, including the way I'm being trained as a medical student, set to come back after a long leave, doing research, it's it's good to know that Clover Health is essentially headed towards that route. Being that centralized, that's what he's basically saying, democratizing healthcare decision making through the Clover Assistant machine learning technology. Almost like creating a new up-to-date where this may, who knows, be able to help with medical education as well. I mean, who knows? I mean, this can be taken into so many different ways, right? But I just wanted to give you guys kind of my experience for people that just probably bought the stock because I just saw a recent meme because of a short squeeze, and you guys wanted to be a little bit of healthcare experts. That's a little bit, of that, right? So let's get back to it.
It's in excess of 1,000 basis points, and we just expect that to grow as more features go throughout. So I think our operating model and our
So he just said something important about 1,000 basis points. What that basically means, it was in their 2 quarterly earnings reports ago, or no, it wasn't. It was in their JP Morgan Health Conference. If you compare them to the incumbents, the MCR ratios, it's actually doing a lot better in comparison to others due to the fact of their Clover Assistant model. It actually is working. All right.
Platform is really built around benefiting from an open network. Whereas a lot of other players in the space, that's not their core business line, and their clinical strategy really depends on attribution to HMO networks or primary care doctors in an HMO network or / kind of narrow network design around primary care physicians who have strong coding ability, let's say, or are already performing well on gaps in care.
Okay, got it. Okay. So shifting gears here a little bit, and I know you also touched on this a little bit, but one thing that investors maybe have a little bit less familiarity with and need to get their arms around when looking at the company is some of the Medicare direct contracting that you have. Maybe you could spend a minute or two just sort of talking about that part of the business, but also I think CMS introduced a move with this new Reach model for Medicare direct contracting. Maybe talk about how that might impact the company as well.
Yeah. So now direct contracting renamed ACO Reach. We were very pleased to see the proposed changes. I think one of the more interesting ones, it was the first actual rule promulgated under Medicare ever around actually creating financial impact tying to health equity, really tying it back to area deprivation index, where there's an adjuster up and down depending upon which decile one is in. So I think that's a good potential preview as to what could happen on the MA side. I think the second thing was by changing the governance components, I think they made it really clear that it's got to be physician-led and physician-governed. A huge thesis of Clover Assistant is really empowering clinicians to make great decisions. We're really just a construct to allow them to benefit from that with Clover Assistant, the ability to take upside and downside risk. So I think long term, and they made a couple other adjustments that we think make it harder for larger organizations that are on the MA plan side to take advantage of maybe some lack of clarity in some of the rules and regs. So I think clarifying that with some of those were really helpful. So at least as we think about it, the rules are adjusted in the spirit of the original intent of the program, which is empowering physicians to benefit from better decisions and the savings that are generated from that. I think there's going to be continued pushback from hospital ACOs, though. So if we think about the last 10 years, there's been probably 10 years ago, maybe only 10% of primary care practices were controlled by a health system, either in a lease model or an employment model. That number's ticked up to 50%. And so what's happened is the Medicare cost per capita in those practices has went up dramatically relative to overall Medicare costs, mainly because you had more spend go under HOPD. You also have a little bit more intense referral patterns and utilization. So I think the ACO Reach model might expose that kind of differential in cost structure. So there's a bigger risk, I think, to the hospital ACO model as you kind of compare the PMPM costs that kind of play out over the next few years. So that's where I think some of the pushback might come from. If I was in charge of a hospital ACO, I'd be worried about ACO Reach being successful because it might put a spotlight on things that are happening.
Okay. Okay. Just kind of bouncing around here a little bit. I mean, given the positioning of the company right now, how focused are you guys on just the overall growth of the Medicare Advantage pie, or is that not really that relevant for you, given kind of where you are, more at the kind of hyper growth stage at the beginning of the corporate journey?
So that's an important question. So the Medicare Advantage side doesn't pay that much, if you compare it to the direct contracting or ACO. So that's what he's asking. But I would assume he would say he would want to continue, of course, because, why not, right? In terms of the hypergrowth right now, I just wanted to just take a quick second to respond to a couple of questions here. So I feel like this company is amazing in growth, but sadly, CLOV Stock is horribly reputed. I hope this company doesn't end up in stocks, because company and stocks is two completely separate entities. That's true. But if I were to remind you, the Tesla stock, Apple stock, they've traded for 3, 4, 5 years of nothing, right? And all of a sudden, the value in revenue caught up with them, right? Wall Street was like, oh wow, hey, whoops. And then they ascend to their intrinsic value. So it's not that there's a bad stock. It's just sometimes the market takes time in finding gems. And this is why it's important to, for example, how do I say this very quickly? So when you look at a company, right now we're experiencing somewhat of a stock market crash, in a way, correction, where you're starting to see PayPal trade at levels of 2017 levels, or Facebook, or Foot Locker, or other companies that were trading at a high revenue multiple. The revenue multiples are compressed. So those are opportunities where you can come in, but every year there's not really opportunities like that. In fact, a lot of stocks are trading over their intrinsic value at a price to sales ratio that unfortunately makes it overvalued. It's better to, this is why we look at companies like Clover Health that are free cash flow negative and net income negative, because we look at them and we try to project out to see, when are they going to become profitable? When are they going to become free cash flow positive? And then what we're able to do, it's a lot more riskier, but what we're able to do essentially is buy stocks before they become mature, before everyone knows about them, right? And that's what we're doing here. But the problem about doing that is that the stock price is so volatile because it's just not stable. That's essentially why the stock price has been kind of disenfranchised from the actual business model, right? By the way, if you're enjoying this video, please consider subscribing, liking, and hitting that notification bell. It'll definitely help the YouTube algorithm. So let's see here. You're right about Tesla, Apple. They're many products I want. Oh yeah, for sure. And they're gonna get there. Eventually, the stock market will catch up to the fundamentals. It's just always the case. I've never seen, if you can give me an example, right? So anywho, give me an example of a stock that hasn't done that. I would love to. That's a stock you want to invest in, right? All right, so let's go ahead and mute.
Yeah, and also tied into that, by the way, you can maybe comment on the rate updates that were also very favorable for next year, which obviously should be a positive, but that should help the industry grow too. But just curious to kind of tie that into your discussion around that.
Yeah, I think on the rate updates, I think we take it with a grain of salt, in the sense of we assume there's some construct of COVID costs that are going to just be around, whether it's vaccine costs, testing costs, et cetera. So we'll assume some of that rate increase was meant to maybe compensate for some of that as we think about next year. When we think about kind of just growth in general, one of the very intentional approaches we've had is really around taking significant local market share. So we're number 2 in individual MA for the entire state of New Jersey. There's really not a lot of organizations that have been successful taking significant share in the entire state.
So that's an important statement right there. You know, in New Jersey, if you guys don't know, they got a really tough healthcare system there. There's a lot of healthcare disparities there, and essentially, Clover Health took it as a challenge, and they dominated the New Jersey market, which is what he's doing. He's flexing the New Jersey market as he should. He should flex with both of his arms, right? That was incredible, which means that all they need to do now is just scale across the United States. Now, just to answer a couple quick things here. So, hello, Al. Don't understand why you attach so much importance about the price to sales ratio. I don't think it is something useful when you try to evaluate a company. Well, so when we evaluate a company, we actually don't use the price to sales ratio. We use an intrinsic value calculation, which goes 10 years into the future and discounts back at a 10-15% discount rate using a 2% perpetuity model. So that's what we use for our intrinsic value calculation. Now, the reason why the price to sales ratio is of importance, it allows you to gauge the market and it shows me where the market is at. Like, for example, if the market is at its extreme euphoric phase, that was, I would say, if we were to put that on a date, I would think it was February 2021. You were seeing Palantir trading at $45, Coursera up in the 40 regions, 40 regions. A lot of stocks were just up there, right? And if you look at the price of sales, they were trading way overvalued to a point where, why are these revenue multiples even there? It's a faster way of pretty much taking how much the growth of the company is and utilizing it to see kind of on a quick adjustment basis. So it actually is useful, and a lot of analysts use it as well. So it is something that is important, and that's why we use it. It's a great quick way of looking at a company. Like, for example, PayPal. Like, oh wow, the last time the price to sales was at that level, it was back in 2017. Let me go ahead, and then there's other ratios you want to look at. Kind of a mental checklist to say, oh, wow, it passes that ratio check. Oh, it passes that ratio check. And then once you do those quick checks, you go in and then you can do an intrinsic value calculation and go deeper, right? But you can't go deep on every stock. You would need these kind of quick filter criteria, almost like a job application kind of check marks. Like, have you been engaged in any criminal activity? Were you in jail for the X, Y, and Z? Oh, criminal, you get what I'm trying to say? And that's why we use it, because it helps filter. It shouldn't be the sole primary purpose of your evaluation. I agree with when it comes to that, but we use it as a form of kind of a checklist, which was what we're going over with our Mastering Stock Market course on Beta Access. If you're interested, there will be a link down below. But that's to help answer that question. Now let's go ahead and do this and we'll get back. Any details or info of Clover Therapeutics, are they using AI data for providing? So I need to take a look at that. I do know there's another stock like that. Sometimes people can, you can see it when you search it. But as of right now, I don't have any information about that. I have not looked at that. All right, so let's go ahead and get to it.
Last many years, we're now on a similar track in Georgia as well. So we're building, I think, pretty deep value by trying to take a lot of share in existing markets. When we think about the long-term path, for us, it's really thinking about what's going to be valued by consumers. And we keep going back to the first principles, which is consumers want choice paired with low cost. And for us, that...
Okay, he said something extremely important right now. I'm sorry I'm stopping it, guys, but this is very important. So he said going back to first principles. Okay? Excuse me. That is important. I think by first principles, which is why it takes me longer to do things. Thinking in first principles is extremely important, and it's very different. Elon Musk thinks in first principles. Okay? Peter Thiel thinks in first principles. Mark Zuckerberg thinks in first principles. What the hell are first principles? For example, if I want to create something, okay? If I want to, give me a moment. So I want to basically think, sorry, there was a disturbance. I want to make sure the live is undisturbed here. So what are first principles, right? First principles is basically taking, let's say, a complex subject, and being able to break it down into its anatomical sequences. So I'll give you an example very quickly. Before, people said electric cars are expensive. Batteries are expensive. This is unsustainable. These were the same people that said, my horse works. There's grass from here all the way down to the other city. How are we going to put gas and dig oil and gas and put gas on the floor and then put gas stations across the whole mileage? That takes a lot of work. We got grass from here down to the Mississippi, right? Those are not first principle thinkers. See, a first principle thinker would say, okay, yes, batteries are expensive. So let's go ahead and let's break down the battery. Let's break it down to their elements from the periodic table. We got nickel, copper, all these different types of components, iron. Let's go ahead and do a price optimization, which is a pure calculus. I think you learn it in calculus 1 and calculus 2. What you do is you break it down and which is why which is why in medicine they make you take these courses because it's a way to think. When you break something down, you can do a price optimization. And what that does is you're able to say, well, it's cheaper to go through that element. So let's go ahead and make a battery and let's put that element in there. So when you use those elements, it's a cheaper battery. Oh, so it must be, crappier. But then all of a sudden you realize it's much more efficient than the normal batteries. You just created something. It's innovation. And people look at you like it's magic, when in reality, it's first principles thinking, breaking down, which is exactly what they're doing. But their first principles thinking is exactly what Amazon did, is focus on the customer, focus on the consumer. What do consumers want? And it's very simple. Consumers want choice. And that's exactly what they're doing. And they want it at a cheaper cost. Let's get back to it.
Means an open PPO model on the primary care side, but paired with great software for clinicians to make great decisions at scale. And then the tailwinds behind that, when we think about over a multi-year period, thinking about 2025, 26, 27, this is, we're in a setup where a lot of we finally see it in the rate proposals. That doesn't mean they're actually going to promulgate in regs, but if they did, huge tailwind for us, huge headwind for the incumbents, but it'll create the right behavior changes as part of that. So our strategy, we think, is pretty unique, probably pretty contrarian as well. But it's one where it's not necessarily a land grab. There's already product market fit with consumers and wanting low cost and a lot of choice. There's already product market fit with physicians wanting very helpful software that doesn't kind of screw them over at the same time. Or doesn't try to manipulate them in making certain decisions. And you kind of pair that together with a cost structure where we're able to manage the cost structure around a practice construct versus a different cost structure for each line of business. We should end up with much better economics long-term as well. So I look at it as headwinds and tailwinds. And then myself and Andrew, our president, we're the largest investors in the company, or shareholders. I started the company with my own capital for the first few years. So we're looking at this over, a 10 to 20 year timeline, which I think is just very different than kind of the other players in the industry.
Yep. Okay. All right. Well,
so that's extremely important. Like, for example, with this whole Stock trades platform that we're building and our artificial intelligent technology, I'm starting this with my own capital. I'm looking at this from a 10-year perspective, right? This is, you got people that are invested in the company, and they are invested heavily. So this is like their baby. Okay, so this is what you want versus others where it's just they hire out an MBA, a CEO here, $200,000, $300,000, $500,000, they give them $1 million there. They do a couple of years and they move on to the next level, right? So let's go ahead.
we're in our final minute here. Some of the companies at our conference here are giving some updates around what they're seeing on utilization trends so far in the first quarter, breaking it down maybe between COVID and non-COVID. Are you in a position where you can provide any updated thoughts on how things are tracking?
Yeah.
Clearly in January, there was one trend that's kind of reversed itself. And also, is there a tight correlation between, when COVID goes up, non-COVID goes down, and vice versa? Just curious to get kind of your updated thoughts around all that.
Yeah, I mean, I'll give kind of general thoughts. I think there's, I'm sure we all kind of keep up on this. I mean, there's definitely another wave that is making it from, now Europe potentially into the U.S. Our hope, I think there's general hope for how this will play out is a much lower severity of conditions in response to that. I think we saw that with Omicron, where the severity was just much lower this time around. When we think about hospital admissions, at least in the Medicare population, I think that was paired with mostly higher vaccination rates than what was in place prior, maybe 6 months before that. But now I think we hope the severity is even lower because it's higher vax rates in the senior population than even before. And a bigger percentage have already had COVID prior. And so the severity should be lower. I think we're seeing that when we look at the very recent Hong Kong data and New Zealand data, where Hong Kong, the severity is super high because you have 2/3 of seniors there that are not vaccinated. And it's flip-flopped in New Zealand with a much higher vax rate with the senior population. Similar outbreak in terms of those infected, but the severity level is much lower hospital admission rates. But if we see a wave coming back again, I think what will happen is we'll see it much more in kind of the incidental COVID with admissions that would happen anyway. And then there's that extra 20% payment that would come into a hospital admission. I don't know if that's ever going to change. It's hard to take that back from a fee schedule perspective.
Yeah. Okay. All right, great. Those were some great insights around that. So appreciate it. So with that, I think we're out of time. I want to thank Vivek for his time today. Thanks everyone for joining this session.
All right, guys. So now we're going to shift to our technical analysis and go ahead and just kind of see where the heck the Clover Health stock is. We went ahead and already did the fundamental analysis. That hasn't changed, usually every 3 months. So we're going to go ahead and shift gears really quickly here and just see in terms of the TA and AI where things are at. So I'm going to go ahead and share. There we go. All right. So this is our private Discord channel. You can find it in the link down below here. I'm going to just place it here for people that are interested. But you're able to basically search out any ticker you want. But we're going to go ahead and go to our research here. These are all of our students going ahead and looking at different types of stocks, but we're going to go ahead and look at a Monte Carlo projection. This is uses a machine learning, deep learning technology to basically estimate where the Clover Health stock is going 30 days from now. So from what's going on, we're looking, the green is a bull, the white line is the base, and this is the bear. It seems to me that more of the data is suggesting that we may be elevated here, but it's going to essentially go, the lowest it can go is around $2 essentially what we're seeing it, but we are starting to see it trick back up. So we are starting to see it slowly start tightening up, but with the whole war in Ukraine, it's definitely adding some variability, but it's starting to stabilize, which is good. Okay. But you can see this is the kind of the tight price range between that. All right, let's go ahead and take a look at the resistance levels from the minute chart here. You just type in the ticker symbol here, CLOV, and the minute. And then it just sends it back to you. Sometimes it takes a while here. Interesting. Well, let's go ahead and take a look at dark pool levels. All right. So in terms of dark pool levels, it seems that a lot of people, in terms of, when I say a lot of people, a lot of institutions are purchasing from the $2.49 region all the way up to the $2.70 region. Let's take a look at the flow sum here. So yeah, the sentiment for Clover is definitely changing. There's a lot more buys here and there's a lot more calls. So that's good. I don't know if there's algo flow data right now because this is live information, so we'll see if there is any. But it honestly doesn't seem. Oh, Good. Okay, we are getting some. So what this basically says here, it says that the stock price here in kind of a yellowish goldish is going up with the algo score. This is a bullish convergence, which means that option traders are definitely betting on the stock going up. We can go ahead and shrink this up to a 1 day just to see. Yeah, so this is definitely from a longer perspective here. We can definitely see that the algo score this is exactly what we need to look at. So from the short-term perspective, definitely we're looking at just a stupendous movement for Clover. So that's good to hear. So there's no data found in terms of blockchain, block trades regarding Clover. So that's not showing any institutions placing anything today. Let's go ahead and take a look at the AI here. So the AI predictive model pretty much states that and combined the swing trade, it's bullish on the swing trade options, and also combined intraday, it seems a little variable, and possibly because the Monte Carlo simulation, what it was projecting out, it could drop again. Again, it could be hovering around that. The market's trying to figure out its bearings, especially with the whole new federal, what the Fed stated. So let's see if we can go ahead and get back into the graph here. See if we're getting here. So we weren't getting any data, but give the AI some time here. So it seems that we're not getting, there it is. Okay, there it is. All right, so this is the weekly chart. So in terms of the technical analysis, we have a support level of $2.20 with the resistance at $4.19. So just watch out for that. It could jump up to that, and day traders are most likely going to take advantage of this. Now, again, you would think that there's going to be some people that are not day trading this. Of course there are. There's people that are day trading this. They don't care about the long-term fundamentals of the company. So they're going to be going in and out. So as you can see here, so that's going to be the cap for that. But let's go ahead and switch to the minute. Oop. The minute will give us kind of what's happening now. Let's go ahead and switch to that. There it is. So in terms of the minute, this is actually really great. So it looks like we have a support level of support at $3.10 with a resistance in terms of, as I stated from the weekly chart, around $4. So we'll see if we can test this support. If we don't, we're going to break down and hit the $2.87 support. And if we break that, we'll hit this $2.67. But these are essentially the levels of support. But as you can see, this AI is extremely talented, because we could see how it just bounces off of here, goes down, tries to test it, fails, bounces off again, bounces off here, tests this level of support, tests this level of resistance, passes this level of resistance, maintains it, breaks it, goes ahead, bounces off, increases, bounces off, breaks it. And as you can see, people day trade this. You can go ahead, great. People can come in and enter a position here, wait for it, see if it doesn't break off. Okay, great. Once it breaks, sell, wait for it, breaks off here, has a level of support, go buy, the people buy here, and they sell here. So you can day trade this if you want. In fact, in our private Discord channel, there are some students that actually are day trading this and have a long-term position. In fact, they have two different accounts, and that's actually great because they could let's say, for example, if they got caught stuck holding the bag, they'll just hold it long-term because they know the value of the company is obviously higher than what it's trading now. Well, I mean, I personally I used to have time to do this. I just don't have time to day trade. I'm just I'm going to be a physician, so I'm not like a day trader. I used to be, but not anymore. I'm more of a long-term holder, but I do teach people how to do it. I've done it for quite some time. But people make a lot of money off of this. I mean, coming in from this movement here to that is a, I mean, we can just calculate it here. Let's say 230, 310. So let's do 310 minus 230 divide by $2.30. Yeah, you see, multiply that by 100%. That's a 34.8% increase. That's 30%. That's 38% on your money. And you do that a couple of times. You do that like 4 or 5 times. That's five. That adds up. You multiply that by 5. That's 173%. I mean, you're essentially outperforming the stock market. Usually, the stock market annually returns around 7%. You're outperforming the stock market 24 times if you can do that. Multiply it by 7. If you can, properties return an annual, depending on what you're getting. The properties return an annual 8 to 10%. So that's what people do that. I don't do it, but I'm just saying I'm just trying to show you guys how what people can do here. So making money is making money, right? So that's a way. So here's the hour chart just to get a little bit more data what's happening. So right now we are hitting a level of resistance here at $3.21. We haven't been able to bypass this level of resistance because once after we hit this, the next level of resistance will be $4.18. So we'll see right now. Let's take a look at CLOV right now just for the real life prices, what's going on here. We're at $13.16. So we'll see right now if this holds or breaks. But it's been trying to break this $3.21. So we'll see right now if it can. If not, it's going to go back down and test the level of support here. So you can see how helpful this is, right? For people that want to do, and then you could do other stocks. So you don't have to do Clover. I mean, this is just, we serve, this is a one-stop shop. You want long-term, we got long-term. We got short-term, you got short-term. We want calls and puts, we have that for you. You want short squeeze stocks, we have a channel right here for short squeeze stocks, which technically returned just today. We got 90% on PIK, induced plus 27%. This is just today. So PIK 90%, induced 26%, CYT 27, 22, 21, 21. So we're doing, it's a one-stop shop where people make money. In fact, I just wanted to give a shout out here to our profit section here. This guy, Ken, shout out to you. One of my portfolios up 2,500 since joining 2 days ago. Best $10 I've ever spent because we charge $10 a month. Shout out to you. Congratulations, bro. I'm really proud of you. With all these other people here with upping, 4%. What is it here? Let me take a look at. Some people are up 400% on their monies. Look at that, 400%. We're doing really good. We're doing really good. We are kicking ass. So I'm very proud of us. Shout out to all of you. You make me very proud. And this is why we built this platform. All right, so let's go ahead and let's take a look finally here at the day chart here. So if we do bypass this level of resistance at $3.21, you would have another one at $3.72. So you can see how you can kind of map these out and intersect these different levels of resistance and intricate them with your investment thesis and be able to come in, come out, come in, come out. And so it's honestly, you can make money any way you want. So it's an opportunity. So long story short, I think this is it. Let me go ahead and ask any questions. So I don't see any predictability. It looks completely random. Either it breaks it or it doesn't break. And if it didn't break, then it breaks it. So in terms of, just to answer this in a very quick consensus here, I just want to be very clear. A lot of people use TA, technical analysis. It's how do I say this? When so many people believe in something, it's called a self-fulfilling prophecy. And let's go ahead and just put this, here. Oh wow, look at that. Self-fulfilling prophecy just pulls it up. So self-fulfilling prophecy is the process through which an original false expectation leads to its own confirmation. When you have all these people come in, they just all come in and they're doing the same movements. Well, I have to tell you, I mean, it's going to end up doing it. And people just all over the world are doing this. People in China are doing TA on Clover, and Europe, and they're all TAing. And so that's why it ultimately, this is the system that essentially is working right now, which is why I'm trying to provide it to all of y'all. So you were in Meet Kevin's last video. Do you guys want to watch that live right now to see? Oh, sorry, my dog just opened up the door here. I know this may seem a little bit unprofessional here, but we're all family here. You guys want to see my golden doodle? Just really quickly here. Come here, buddy. You want to come here? Come here, come here. Come here. Come here. You want to say hi? You want to say hi? All right. He's a little shy. Camera shy. All right. Just wanted to, say hi to the family here. So Meet Kevin, last video. So I know Meet Kevin. I honestly feel really bad for him. For people, just making a lot of funny jokes about him. So that was definitely sad. He's doing a good job helping out the community. That's pretty cool. I mean, are you talking about me specifically? I hope it was a good. I hope it was a good discussion that he had about me. I mean, that was. Let's see here. Let's see here. So I assume you guys want to see it, right? So let's go ahead and do the Chrome here. Let's stop screen share and let's share it for audio. Meet Kevin here. Share. If you guys haven't looked at this guy's really funny. I like the strong man, personal finance. He always at the end of his videos he goes like wee. He's very fun to watch. So make sure you watch him. He's pretty fun. Meet Kevin played you. What is this? It guys? Would you know what video it is? Do you guys want to watch it together? I mean, I don't want to like ramble through his videos here. I don't know, guys. Well, let me know which one it is, and maybe we could do kind of a debrief on it. That would be interesting. But yeah, I honestly don't look at a lot of people's videos. It's I try to. It helps with my creativity process to be able to give you guys something that's It's like I learned it from a professor. He follows 0 people. And he essentially, it allows him to kind of shut out the noise. I'm not saying Meet Kevin's noise, but it allows essentially me to focus on, without getting any external bias and just keep it purely on the numbers. But that's what essentially, oh, is this it right here? Yeah, so in any case, that's pretty much it right there. I'm trying to think here. Is there anything else that I want to say about Clover? Honestly, guys, yeah, that's pretty much it for the Clover ones. And my favorite live chat so far. Hey, man, that I'm very happy that we're able to provide you guys with great insightful information. And just to kind of preface this, I'm new to YouTube. I've only been on here for 4 or 5 months. So I'm new to this whole YouTube, speaking, by myself in a room here. So it's kind of weird, but I've gotten to comfortable with it, talking with you guys. The live streams make it kind of normal. I've been doing this for 10 years with this whole stock market, but I have been teaching for a long time. So I've been teaching for 15 years. So it's allowed me to kind of transfer those skills on over. So just give me some feedback, and love to provide you guys. It just feels good to be able to help you. I'm very proud. I mean, guys, you have to admit. Let me just show you something here. Stop screen share. I just have to say something here. I mean, I'm just really proud. I mean, just to see these people here post all these profits. Here's Don. Hey guys, tried out the Bullseye AI, made some nice profit. I mean, just this makes me happy just to see everyone profiting. It just feels good. It feels good. Makes me really happy. So that's something that really means a lot to me. No, I definitely hope so. We always try to put God first in everything we do. I recommend, we have a motivation section here. I recommend you all check this video out. Put God first in everything you do. We like to do that. Because at the end of the day, we are here to serve people. And I know this is a longer live, but I just wanted to we never really had an opportunity just to kind of talk kind of real life, what kind of makes me tick in terms of why I'm doing this. I'm not doing this for the money. As you can guys tell, I'm doing this to help. So yeah, God bless you all, and I'll see you on the next one.